All right, everyone, welcome back for another episode of Carnivore Trades. Today is Thursday, January 27th, 2022. So, market's gapping up and rolling over again. Kind of like yesterday, same kind of story here, although less forceful selling today. As yesterday, tech is weak again. Tesla getting hit on earnings. So this one taking a dump today, down 11% here. Is getting close to that 200 MA here. And, there's a lot of support in this area. But Tesla, getting hit pretty hard here over the last couple of weeks, just like everything else. But selling off sharply on earnings. By the way, you guys remember the top call on the exact day. I did post this for members that, Tesla was likely to top out here. And that has been the case. And that top has held. So pretty crazy stuff there. That was all based on cycle work and measured moves and stuff like that I had done on the stock. But pretty remarkable to see how far off the highs it has come. And also, another person who was selling in this area was Elon Musk. So that definitely says something about the stock. Anyways, semiconductors we talked about being weak with tech here. Look at how they opened today, the SMH here, really just been weak all day long. The market was holding up a little bit here, but semis turned negative very quickly. They barely gapped up here, and that was helped by Intel. So Intel getting hit, down 7%, gapping down to the lows here. This just looks like a dog with fleas, honestly. Lam Research also not having a great day. They reported yesterday, down 7.3%. Abbott is hanging in there, though. It is managing to scratch out a gain, although way off the highs. So they reported today. Now, obviously, what is going to move the market today is Apple. Apple getting hit just like everything else. And, really what they do on earnings is going to really dictate what the market does. So it's all about Apple right now. We did have MasterCard report this morning. They are up to 2.25. So not a terrible move there for MasterCard. Pretty volatile move altogether. And then Visa does report after the bell too. So that is a big, big market cap stock. But it's really all about Apple at this point. Let's take a look here. So the Russell getting hit pretty hard. So that is actually taking out Monday's low. So, we noted this yesterday, and we had a small position in the Russell. We bought the lows here, and the Russell on Friday and Monday was outperforming the market. And then sometime around Tuesday, it started to change. And then yesterday, when it sold off, we dumped out of it. We took a small gain. But the Russell has been underperforming, and that is somewhat noteworthy here. You never like to see the Russell underperform the market. In the near term, that's generally a sign of weakness here. We're seeing generally, again, large cap stocks. The Dow is holding up the best. The blue chip names are the ones that you want to be in right now if you're going to be long for the most part. And then speaking of the Dow, here's this trend line here that is now pretty much broken. We got all the way down to this gap fill here, which is a beautiful level, and a nice pop there on the Dow off of the lows. I am getting word, though, that it does look like they are gamma squeezing this market lower a little bit with short-dated puts, and dark pools are picking up shares. So, again, I'm still kind of in the camp that while we may come down and test the lows maybe next week a little bit, I'm not convinced that this, and I do think we have another leg lower in this market. Let's make that clear. But I do believe that in the near term, we do get some type of a counter trend bounce. It's very uncommon for that to not happen. Especially, again, given the size of this tail candle, this is the type of thing that's just going to go away. It's not going to just break after one try like that. So I do expect some type of a rally. How big of the rally? Again, I'd say maybe 450 on the SPY. That would be a good area there. That's pretty much a 50% retrace from this pivot. So somewhere in that range is kind of a good area that I would think would make sense for a bounce. Anyway, so yesterday yields did surge a little bit. They are pulling back. 10-year having an inside day, down 2%, but really just inside of yesterday's move. So nothing really wrong with that. Again, and the 30-year pulling back a little bit more. But again, still kind of just holding this upper range. And again, we talked about the weekly pattern yesterday. That's a beautiful weekly candle. Bullish inside bar, 1, 2, 3 candles there. And the same thing on the 10-year, nice 1, 2, 3 bullish inside bar, consolidating right on the 200 moving average. That is textbook. So that should get up to 2 to 2.1% sometime in the near future, I would think. What is not pulling back today is the dollar index. So the dollar continues to rally here. And, I've been on this for months. I've been saying the dollar is going higher. and this turned out to be a great dip buy. If you got in on that, we definitely did at Carnivore Trades. So we are well in the money on some UUP call options. UUP is basically ETF that tracks the dollar index, and we're doing handsomely well on those right now. But dollar index really taking off here. Beautiful weekly time frame here. Look at this pullback and then a blast off. So dollar looks to be on breakout. Doesn't mean it's going to go straight up, but dollar is on breakout, and I do think it definitely can get up to that 99 handle for sure before you run into some major resistance. But nice move there on the dollar index. Dow transports also showing a little bit of weakness. So coming through Monday's lows here, it'll be interesting to see if they save some of these things before the close. We talked about this area on the Dow transports. Just put it a trend line here. Somewhere in this, this kind of area is good support. It did hold Monday, so it'll be interesting to see if they save it before the close today. We got 30 minutes left. The same thing with the IWM. It'll be interesting to see if they pop this back up. I'd be inclined to think that they do, but we'll see what happens here. But Dow transports showing a little bit of weakness. Energy coming off the highs again a little bit, but still made a new 52-week high today there on the XLE. XOP also pulling back just a little bit here, but again, energy's been strong. You see the OIH here, nice reversal, but just energy's just been it's really tough to fight this trend right now. Energy's just with all of the geopolitical stuff going on and interest rates going up. Energy's just been a powerhouse lately. Spot crude again making 52-week highs today. It did pull back a little bit here, but again, I have no sell signal. I have no reason to really fight this trend right now. And until it, if it makes a lower low, then yeah, maybe it's in pullback mode. But until that happens, I mean, it's really just been a tough trade to fight here. And Nat Gas getting a nice bid today as well. That actually taken out yesterday's high. So if it can close above this red bar high, that would show strength in the near term. But I have really no trade here on Nat Gas, at least not right now. Financials via XLF here. Nice rollover today on the XLF. JP Morgan came down pretty sharply here. Broker dealers have been holding up well. You see Goldman there. There's the broker dealers. This is basically flattish on the day here. Morgan Stanley's been a strong horse, so that continues to be a strong horse, up almost 1% today. So really, Morgan Stanley outperforming the market here. Wells Fargo flattish to negative, and Bank of America also down 1%. So a bit of a mixed bag here in financials, but again, another strong sector that we've been following. What has not been strong right now, really opposite of the dollar trade here, is gold. So gold is going to lose this green bar low here. So that is a bearish look here, and we talked about this again. That's why I said be careful with gold here. You don't want to own it. They did the OPEX trick again, essentially. We got up here and it rolled it right over. They got up here and rolled it right over. We got up here the week after OPEX. What do? Roll it down. So gold taking a big hit here. And if the dollar continues to break out, it's not going to be good for gold. At least that's the way it's looking right now. Sometimes gold and the dollar can go up together when there's fear and uncertainty. But at this point, that's not really what the charts are saying. So gold is responding negatively to the higher dollar and the higher bond yield. So that is kind of the story right now. Silver, this has been all over the map. This one's trickier because of its industrial demand, but silver also taking a big hit here as well. You do kind of have a short-term kind of trend line, perhaps, maybe coming into play right here. So it could get a little bit of a bounce. I said that 2250 would be support, and that looks like it could be the case for the near term. But if that doesn't hold, it's going back to the lows, and I hate to say it, but it's probably going to be headed lower. You got massive support here around $18, $19. So that would be a good downside target for it. Should it get down there, but again, with the dollar rising, it's just a tough trade right now. Platinum also pulling back here, although this pattern is a little bit better here. This is actually not a bad bullish pattern here in the near term. So gotta have this thrust up and then a little consolidation. So if that consolidates a little bit further and does some backing and filling, maybe it gets up to that 1100 handle, over the next couple of weeks. And palladium, obviously, again, just been a powerhouse. This is into resistance, though. That doesn't mean it's a short, but look at that 50-week moving average. This is where you broke down from. You're right through the 100-week moving average. You're right into the 200-day moving average. So lots of resistance right in that area on palladium, but it has been strong. And again, it is geopolitically driven. So that means it's going to be news driven. So you always want to avoid things like that. And copper, again, nothing really changed here. Same story, 451 and 436. Although I'm starting to sour a little bit on copper because you don't. I would have expected it if it was going to break out. This would have been the time to do it right here, or at the very least right here. Like there was no follow through. And generally, if you're not going to break out, you're going to break down. So, um, yeah, I would say I have a slight negative bias on copper, at least at the moment. Okay, let's flip over to Bitcoin. We'll talk crypto really quick. All right, so Bitcoin pulling back off the highs yesterday and continuing to follow through here. I still think, and now it is putting in potentially a bearish pattern here. So, I mean, we took the stairs down, bounced here, bear flag, came down, bear flag, came down, bear flag. So we could be putting in another bearish pattern here on Bitcoin, but again, nothing's really changed here. If the equity markets do bounce, Bitcoin likely gets a bid, and those upside targets haven't changed for me. If you're looking at, this area right in here, 42,000. Max upside, I say, be like 44 to 45, which would be back testing this trend line here if it gets up there. Outside of that, again, overall, I do think that the lows here probably hold at least in the near term, and maybe in the month of February, sometime maybe in the middle of the month. That's probably when we're going to make our next leg lower. If I had to guess right now, obviously that's a little far ahead for me to project, but that's just kind of what I would have penciled in, at least at the moment. Anyways, come check out the new website. It is live now, so I'm going to be phasing out Patreon, and it's going to be all moved over to carnivoretrades.com. So that is live now, and we already got our first posts out, and that is rocking and rolling. It's only going to be $5 a month. For a little bit longer, then it's going up to 15. So if you want to get in now before it goes up, and lock in that price. Anyways, guys, thanks for watching. Take care. Like, comment, subscribe, etc. And I will talk to you all tomorrow.